Hey everyone, how's it going? My name is Richard, and in today's video, we'll be talking about how to trade pullbacks / trade reversals. So here's a brief run through of what we'll cover in today's video: pullback buying versus breakouts, what is a trend reversal / pullback buy, and the wrong way to buy the dip. Then we'll move on to key elements of an optimal pullback trade, how to stack the probabilities with you, and also levels to trade against with a ton of different examples. Then some tips on executing pullback buys, managing risk with pullback buys, and finally advanced tactics, stacking entries. So getting into the video, let's talk about buying pullbacks versus breakouts. So breakout buying is when you buy a push through a prior resistance level, such as a base pivot on high volume, suggesting that institutions are involved right on that day and could potentially start a nice uptrend from this prior base. And I go really in depth into base pivots as well as breakouts in a video that I made last week. So go ahead and check that out after this one. And today we'll be mostly focusing on pullback buying, which is when we have a prior uptrend and then some intermediate term weakness and a retest of a prior support level, and then the start of a potential new uptrend. So how do you choose in between these two different techniques, buying on strength versus buying on strength after some intermediate term weakness? Well, I think as a trader, you should have both tools within your arsenal so you can kind of adapt and choose which one to use depending on market conditions. For instance, in 2021, ASAN has really been one of the exceptions to the rule because breakouts haven't been falling through too much, and often we do get a retest, a pullback right after this breakout that offers a better risk reward opportunity. So you basically want to master both these techniques, as I'll mention in this video, to basically adapt to different market environments. So getting into the video, what is a reversal / a pullback trade? Well, it's essentially a trade against a significant prior level of support, such as a base pivot, a moving average like the 50-day moving average or 23 exponential, an anchored VWAP, or some other level like a high volume close, 100 level, or a whole number like what Ray loves to do. So you can really be flexible with this, find what works for you, and do a bunch of studies to find kind of the optimal way to adapt this to your personal style. So what's important here is that the long-term trend in the stock is up. We always want to be trading a pullback within an overall long-term uptrend, suggesting that institutions are net accumulating stock. And we also want to buy on strength after recent consolidation, weakness / pullback. We don't want to be catching falling knives. We always want to wait until at the very shortest term, the stock is moving up at that point. So on the left here, we've got an example of Bill. This is within a prior uptrend. I have it cut off on the screen, but this is a base after a nice move up from its IPO, then a nice long-term consolidation, a breakout here, and then a gradual drift back into that support level and a strong reversal up from this point. And now we had a recent gap up after earnings. So this is an ideal pullback entry here, right at this prior pivot level. You can buy on weakness here, nice hammers off this level, meaning that we undercut it and then rallied back through this prior level from the base pivot. And then you had a nice run before earnings and then this very strong move on high volume. So this would have been an optimal entry given this chart. So before we move on to some guidelines for buying pullbacks, I want to mention how not to buy the dip. Really, this is so important. You do not want to trade against the long-term trend. So if the stock is below a declining 200-day moving average, the probabilities are stacked against you, and net that stock is not under accumulation by institutions. You also don't want to ignore signs of distribution. For instance, here we've got a chart of BABA. We had some downside reversals near the top here, that's some large gap downs on high volume here, and here, and just a bunch of warning signs before this longer term downtrend. And if you tried to buy the dip and buy reversals within the context of an overall downtrend, you're just trying to catch basically falling knives, and the probabilities are not with you at that point. You always want to be trading with the trend of the overall market as well as a particular stock. However, back here, you can see that we had a base breakout. Then we had some nice constructive pullbacks. So here, funds are accumulating stock, and this is when you want to be buying pullbacks within the context of an overall uptrend as we're basically moving up above a rising 50-day, 200-day, and also shorter term moving averages. So moving on, we've got key elements of an optimal reversal. So as I mentioned, we always want to see a prior uptrend and strength before we try to buy a pullback. We want the level that we're trading against to basically be very significant, such as a prior base pivot moving average that a lot of people are watching. and the velocity of that pullback is very, very important. And basically what I mean by this is if we fall from all-time highs down to the 50-day moving average in 1 or 2 bars on very high volume, that suggests that there's distribution going on at that point. However, as with the case of Roku last year, we had a slow drift on declining volume well below average back into the 50-day, 10-week area. So this is exactly what you want to see. Then we had a nice push up on volume. So the velocity of this pullback, you want to see a slow drift back, basically just letting the moving average catch up to price versus a quick sudden move on high volume with gap downs back to that key moving average. So as I mentioned, you want a drift downwards and low volume on that pullback. And lastly, we've got the confluence of support. So here with Roku, we've not only got a drift back into the 50-day, 10-week area, we've also got this prior resistance level that has now transitioned to support. So you've got that added edge as well. And when we're making trades, the more edges we have in play, the higher the probability of a stock working like this, because more people are watching that particular setup, and institutions right here are clearly not distributing stock because of very tight price action on low volume. So always analyze the price and volume action surrounding a pullback and look for as many support levels to coincide at one particular price level as possible, just to add to your probabilities. So that's a quick run through of key elements of an optimal reversal. And moving on, I just want to remind you guys to leave a like down below on this video. It just takes a few seconds and helps us out immensely. And of course, subscribe if you want to see more great videos just like this one. And here I'm highlighting the Traderline conference that we had earlier this year, where we had 16 amazing guests, hedge fund managers, portfolio managers, US investing champions present on ideas and topics of their choice. And it's a great way to shorten your learning curve. So go ahead and check that out. That'll be linked down below in the description and should be popping up right now above this video. So go ahead and watch that after this one. So now that you've liked and subscribed to the channel, let's go ahead and move on. And now we're going to get into a ton of different examples of different support levels that you can use to trade against. So first up, we've got the anchored VWAP pullback buy. So here we've drawn anchored VWAPs on a bunch of different stocks here at significant levels. So here we've got a high volume gap up on DocuSign back in 2019, I believe late 2019. You can see how we have a nice constructive drift downwards on declining volume right here, a nice push off here, and this starts a nice uptrend going into 2020. And we not only get a nice support buy at this level, but does have another retest here. And even during the March correction, we get a retest of that anchored VWAP level. So this is an awesome way to buy pullbacks, especially after a significant breakout and expectation breaker like a power earnings gap. And here we've got another example with Twilio, ticker symbol TWLO. And we've got a very similar thing, the highest volume ever on this earnings gap up. And we get a bunch of nice buy point opportunities here as a pullback to the anchor VWAP here, as well as here. So this has remained a very important level. And you always want to analyze the price action. You've got a little bit of a drift downwards. These are kind of quick hammers off the anchor VWAP. So in this case, you definitely have to be ready to potentially buy this off this level. So in this case, you definitely have to be ready to watch this level. But if you do have alerts set right at the anchor VWAP, this could be a great opportunity to position in a stock clearly under institutional accumulation at this point, which went on to basically double from these buy points. Moving on, we've got PLTR, which was also in my pivots video, and I placed an anchor VWAP right at that level. You can see that within the strong uptrend, we retest this anchor VWAP a few times. Basically rides it up here. You can buy off this level on pullbacks and basically forms the bottom of the base here before forming a nice VCP, another breakout before ultimately topping and forming another base and kind of violating the anchor VWAP right here. So there's a little bit of an expectation breaker. And if you didn't sell out after this kind of failed move up to all-time highs, this would be the point to exit the trade. But basically, I want to highlight that after you've got a breakout like this, you can place an anchor VWAP right here and look to buy it off that level as it makes a strong move upwards. Also, we've got the trade desk also placing an anchor VWAP from a breakout point, and it had a nice opportunity shortly after right here, then some retests and formed the bottom of a base here, which led to a really strong move and some more retests down the line as it forms a base, ultimately breaking below the anchor VWAP right at this point. So just another example, and the anchor VWAP is most effective very shortly after this breakout point on high volume. So definitely keep that in mind, but you can see it's relevant even over here at these later dates. So those are a few examples of the anchor VWAP acting as support. And it's very important to remember that nothing is support until it's confirmed. And we see a rally off that level. Definitely keep that in mind. But if you've got a huge gap up on the highest volume ever, suggesting that institutions are accumulating stock, definitely have the anchor VWAP anchored right to that point and watch for nice drifts back down into that level to see if there is a nice pullback buying opportunity. So moving on, we've got another potential area of support, moving averages. And for this, what we like to use is the 50-day moving average, the 65 exponential moving average, as well as the 23 exponential and 21-day simple. And I've also got the 10-day simple highlighted in blue. And how we've picked these moving averages is basically, these are the ones that, going back and studying history, a bunch of true market leaders respected during their strong uptrends. And we've got an entire video on how to pick moving averages. So if you want more detail, go ahead and check that out. The link will be down below in the description. But here we've got two examples here, Moderna mRNA from this year and Neo from last year. Moderna, after we had the standard base breakout right at this point, moved up, then had a nice drift down back to the 23 exponential, rallied off it twice here, and had another retest right here, actually an oops reversal as well. So a nice area of support right at this level, as well as Confluence with the prior base breakout. This would have been an excellent buy. And from this point, it basically doubled in just a few weeks, really. And you could have added at this point as well off the moving average in the morning. For Neo, we had a breakout within the base here, then a nice push off and a respect for the 10-day. And then it really respected the 23 exponential. If you had that up on your screen, and basically didn't close below it until it started its last base here before ultimately rolling over. But the 10-day in the short term after a breakout is an excellent place to add on pullbacks. And then the 23 exponential for the stocks that are really under significant accumulation. That is an awesome way to add to your position after the initial breakout. Here you've got another breakout from base and then a drift back into it on declining volume. That's really clear here. This is textbook action, and then a nice rally on volume. So definitely a bunch of places to add off that moving averages, hammers back through it, and then a nice move up until it forms another base. So moving averages, the 10-week, especially on a weekly chart, are great places to add to true market leaders already in really strong uptrends. And lastly, I want to mention pullbacks to prior pivots. So here we've got Tesla, which had a breakout in 2020, then a drift back in with very tight price action on declining volume, and then some hammers off that level, ultimately starting a really strong run into the end of 2020. So prior base pivots are an excellent place to add on pullbacks, even if you bought that initial breakout. And here we've got another example with SPT, which had a breakout on high volume, drift sideways, and then a drift downwards on very low volume, and then a hammer back through that base pivot. And you could have started a whole position right on this day as it hammered back through this base pivot, showing strength after this pullback. And you could have even added on the next day as it broke a DTL, but we'll talk about that a little bit later when we talk about advanced entries and kind of stacking different setups together. So this would have been a great entry on the pullback right after it retested the base pivot. So in terms of what you want to look for, as I mentioned before, confluence of support levels is a great way to stack the probabilities with you, and you want as many edges at play as possible. And here we've got an example of Tesla back in 2019, a huge gap up on high volume on the highest volume ever. And then even the next day, we have once again the highest volume ever, really suggesting that institutions are interested in the stock. And you can see that from this point, we really went on a super strong uptrend before the 2020 March correction. But what I wanted to highlight here is many support levels basically coincided at the exact same price point. So if you draw an anchor VWAP from the first gap up here, this basically supports price right here. But if you also take the high volume close from the second day on very high volume, this lines up exactly at the same point, and you've got the 23 exponential. So as many setups as possible, along with tight constructive price action, a drift on low volume. This suggests that really nobody's selling this very tight price action on low volume, and then you've got strong moves up on volume off this support level. So this would have been an excellent way to basically enter the stock, even if you missed the strong earnings gap up. Buy on strength here, or buy as it retests this pivot and then pushes up on high volume. And one last thing that I wanted to highlight with this example is you've got significant signs of accumulation before the pullback buy, and you've got a prior uptrend. So that just suggests that institutions are accumulating, which is the best way to buy pullbacks. You want to be buying already strong stocks that are experiencing intermediate weakness and showing that there's not much distribution going on. Buy that drift back into the support levels on declining volume. So here's some guidelines on how to execute a pullback buy. First, you want to identify candidates on the weekend and when the market is closed. That way you're basically more objective and can really go through a ton of charts and find the best ideas for the next week. And when the market is closed, you also want to plan out your trades in advance. So you want to know how much you're going to risk, basically your position size, all of those key factors. That way, when the market opens, it's all about execution. And then you want to go ahead and set alerts at that support level. So basically ensuring that when the stock is undercutting and reclaiming that support level and basically moving down and back through, that's what an undercut and reclaim means. You basically want to have it up on your screen, ready to buy, having already planned out the trade with your position size, how many shares you're buying, and your risk. So you want to make sure you set alerts so you basically have the stock up on your screen at the relevant time. Then you want to wait for constructive price action. So after a pullback here, we always want to see signs of strength before we buy, and that is basically in terms of price and volume, tight price action, volume coming in onto the upside, and then it's all about executing the trade and putting it in with your broker. And here I've got an example of SPT. This is a daily chart up here. This is a 65-minute chart down here. This is the DTL, and this is the same DTL. And here is the day where we have an undercut and reclaim of the prior pivot level. This is highlighted in green, which is this black line up here. And we have an undercut, then a push through on strength, nice volume coming in. This would have been the first potential entry. Then you could add as it breaks the DTL intraday, and then even add as it rallies off that prior pivot later on in the day. And the next day, when we break this DTL on the daily, we have really tight price action, very constructive here, and a push up on volume. So that's kind of basically how you execute intraday. And there's pretty textbook action that you want to see on the actual day when you want to buy a pullback. So next up, I want to talk about how to manage risk with pullbacks. Not all of these are going to work, and you always want to be ready and protecting your downside by setting a stop loss and basically knowing how much you're risking before even taking the trade. So you basically want to set that initial stop loss where the setup fails. So if you're buying a bounce off the 50-day moving average, once it undercuts that 50-day, you want to be out, no questions asked, because that setup is no longer valid. And if you're buying after a bounce off a prior pivot level, the low of the day is often a good place to put your stop. And basically you want to manage risk initially, and then as quickly as you can without choking off the trade, you want to protect at least some profits. And overall, you want to keep losses as small as possible, definitely less than 7%. And I like to keep them at 3 to 5% maximum. And after you buy a position, you always want to set alerts to manage that position. So here are some advanced tactics, basically stacking entries, basically using breakouts and pullback buys together to really basically optimize your buy point. So basically what you want to do is pyramid into positions as reversals confirm, and you can basically combine pullback buys with breakout buys to build a position over time early on in the move. So here I've got a chart of Tesla back in 2020. This is a prior base pivot, this black line here, and you could have started your position on these hammers off that prior support level, added through this high, added through the break of this pivot, and basically combine these pullback buys with these breakout buys to build a position as a stock basically works for you, and basically establishing a nice size position before the strong breakout push. So that's a quick example of how to combine both pullback buying off the support level as well as the 23 exponential, and then buy on strength through these pivots right here. So in summary, here are some pullback buying key takeaways. You want to focus on stocks already in strong uptrends and showing accumulation. Then you want to watch for a confluence of support, identify constructive price and volume action right at that support level, and you always want to set those stop losses and manage risk as well. So that's a brief run through of pullback buying. Let me know your thoughts down below in the comment section. I hope you guys enjoyed this video. Leave a like down below if you did, and subscribe if you're new to the channel and want to see more videos just like this one every single week. And with that said, thanks again for watching. I'll see you guys in future videos. Thanks.